okay, across the site. And I'm going to be your coach, your host for this morning session. I'm going to lead you to ensure we can learn and have more progress this morning. Okay, so Capido Morris from Kenya, and then also Kate from Nigeria. All right, so Madam Kate, you are welcome to this morning session. That is advanced knowledge in crypto trading, and this is where we are going to speed up with the basis, okay? The foundation that we've built, the fundamentals, we are going to leverage on that fundamental to ensure now we chew a little bones, not difficult bones, but what less bones that can also upgrade our understanding, our thinking, and then also the faculty of getting the concept of what trading, right? So please get prepared, cheer up, burden up, and then also take your pen and your paper or whatever. Though the meeting is recorded, and you can also go to YouTube to be able to watch the video live or watch it after the session. Okay, so don't be worried if it happens. You may face challenge along the path. You can still go to YouTube to do or to watch it there. Right. Okay, so good morning to you all once again, and let me share my screen for us to start. Okay, let me share my screen for us to start. In as much as we are getting prepared, I always would use opportunities like this to encourage everyone that do your best as you can. Do your best as you can to learn, because ignorance is expensive. Ignorance is expensive, and you can never make any progress in life. You can never make any progress in life if you don't chase knowledge and yet you want to rearrange what ignorance. If you decide to rearrange ignorance, you find yourself in a very huge trouble, and never do that. So that is the reason why such meetings are organized all the time, because for you to be in the crypto world, you see, I've always been saying the crypto market, or when it comes to crypto is a world on its own. Trading is a world on its own, right? To which it is important for every individual who wants to make a penny in this industry to ensure that he can encourage himself to learn. And the fact is, if you hate learning, you can never make shishi in this industry. If you hate learning, you can never do what? Make shishi in this industry. You will find yourself always putting money in a basket or fetching water reward with a basket. You find yourself realizing that you are always fetching water reward with a basket. But if you really mean and you really want to grow, you want to make money, you want to better your finances, you want to ensure there will be more progress. And basically, I've always been saying, one thing about the crypto market and then also the financial market is that if you really want to progress, if you really want to see results, don't focus on the money. Focus on how you can improve yourself every single day. Focus on how you can improve yourself every single day, because at the end of the day, it is the knowledge that you have that will give you the results. Okay, more knowledge, more results. Less knowledge, less results. Listen, if you don't have knowledge and you are making more than what your knowledge deserves, you may not go far, because you may gather everything and the next moment it is out of your control. That is a fact. Listen, if as it stands now, if you are not worth $1 million in mind and someone gives you $1 million, listen, you may hold the $1 million, you may manage the $1 million, but since your brain, your knowledge is not up to how, does not know how to handle $1 million, you may end up losing it with time. That is all about trading. That is all about trading. So it is important that if you really want to grow in this industry, if you want to make the money you have been anticipating, the results you've been seeing from other people, then trust me. Trust me. Maybe no one will tell you this, but whilst we are about to start this morning session, that is the message I'm putting across to you. If you like, challenge it, it will surely happen. If they give you $1 million and you don't have a knowledge that is equivalent to $1 million, even if it takes you decades, that $1 million will still vanish out of your control, because you need what we call audacity to control money. And before someone can get audacity, it is knowledge that gives someone audacity to control things. So if you don't have the power to control things, with time it will vanish. Right? So, ladies and gentlemen, I believe these are some of the key reasons why we always need to ensure we get closer to our chat, we get closer to our books, we get closer to the market, we get closer to the internet and research and get good information. We come to meetings, attend all the necessary meetings to ensure we'll be able to do what? Learn and learn for good. Right? We learn and learn for good. Okay, so my screen is shared, and what we are going to do, we are talking about advanced knowledge in crypto trading. Last week, we met, we talked about the sports, and then also part of the features, and of course, I've received most of your suggestions about how some of you wish we would separate the sports lesson from the futures lesson, and we will take that into consideration. In fact, we will take that into consideration. It perfectly makes sense. And we will still work on getting more resources to ensure all those requests will be made, and also solutions will be provided. So please, whatever requests you have with time, you can always feel free. The researcher is there, other leaders are also there, myself, I'm there. You can always feel free to suggest, and we will put it on our action plan to ensure it add more value to the community. In as much as that, if you are the type you also have something you are willing to present, or you want us to coach you on how you can also start presenting, we are always ready to assist everyone to grow, because we want the best interest of the community. We want the best for everyone. In as much as we are doing all these things, learn to be grateful as well. Whilst you attend the necessary meetings, make sure you don't inbox people. Finding ways and means, that one, when you do that, as I said yesterday, when you do that at your own risk, because if you face any challenge, when you come to me, I won't mind you, especially when I realize that you fuck up already. As the white man will say, the black man will say that you misbehaved, you did not follow the instructions. I would make sure that I deal with you treacherously and drastically. So please make sure that you don't go out there to mess up whilst inboxing people. This morning, I just received a report of someone saying he had been scammed, both his Binance and this blah blah blah. The person told him he will help him, and that. Please, 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 and please, all this information are necessary before I start my lesson. Please, please, and please, do not do that. Inboxing, if you are newbie, if you are a beginner, do not inbox people for assistance because someone shared results, then you jump into the person. Never do that. Do not trust people so much. And some of you, that is your problem. Today they'll wipe your account, tomorrow it's not good. It's not good. Please, let's take good care of ourselves. I really love you and we love you. We want you to stay in business because we want to see your results. We want you to progress, but do not rush. Okay, so this morning, what we are going to do is we are going to focus more on the futures market based on the advances that we've talked about last week. I'm building from where we ended last week, and last week we discussed a lot of things about margin, liquidation. We also discussed about position, amount, and its corresponding knowledge that we deserve to know. And this morning we are building up from those aspects where we treated last week, and I believe you are well prepared for that. So let's go. Let me take my first. Let me get my board. So all right. So when it comes to the futures market, now first I want everyone to know, if you are a beginner here, but this session is an advanced session, and it doesn't matter either you're a beginner or not, it's going to help you because at the end of the day, you will surely gain something good. Now, first of all, I want you to understand the futures markets and advanced markets. Okay, the futures market is an advanced market. It simply means if you intend to trade on the futures market, you must first understand the nature of it being advanced. And the spot market is both advanced and beginner friendly. Both advanced and what and beginner friendly. Which simply means if you see the futures market to be so challenging, if you see the futures market to be so challenging based on your understanding, please go to the spot market. Trade on the spot market. Now, if you trade on the spot market, you won't die. I've explained those things last week about floating loss, how floating loss managed to happen, and what do you mean by floating loss. Last week I did that. So my advice to you, whilst we are learning on the advanced market, is that if you think your knowledge, because on the futures market, in as much as you may have the requisite knowledge that you deserve to know, still challenges that involve there are sometimes difficult to bear. Which simply means, if possible, you want to find yourself in a good soup so that you wouldn't feel the excess heat, then stay in the spot market and trade. Now, on the spot market, I've explained this to you, you need what you call patience sometimes to wait a lot. Yes, of course, that is the value of trading on the spot market, or that is the price to pay on trading on the spot market. And also, the futures market also has got its price. Please stop using my board. Okay, it's for me alone as a teacher to teach you. So please stop using my board. Right? So if you find it so challenging understanding the futures market, first go to the spot market, relax there, trade. Trading on the spot market, I'll get back to that on our next session, maybe another time when we get only sports class. I'm going to take them to explain certain things about the spot market to you. Trading on the spot market is not a crime. Yes, we should understand that there is no part of the crypto market that is so easy, right? And when it comes to trading in general, there is no part of trading that is, we will say that, okay, as for this, oh, no, there is nothing like that. Every part of the market comes with challenges, right? But it is about the trader being able to understand the challenges involved, and then also knowing how to cope with it. But fortunately for us, we having RoyalQ simply means that we want to reduce the challenges that involves in trading, right? We using RoyalQ simply means we want to reduce, not because we want to avoid all challenges, but we want to reduce by getting good strategies to trade, right? So when it comes to advanced marketing using the futures market, first there are a few things that we are going to discuss here this morning about the futures market, being it an advanced market. Now, in our previous session, we used the board. In our previous session, we talk about few things like the margin. We talk about a few things like margin, position amounts, that is PA, right? And then also liquidation. Did we talk about liquidation? No, I think we didn't. But then we talk about leverage, leverage, and then also price movements. And we took time to explain deeply about these things, price movements. So if you missed that session, go to YouTube and then go and watch it. I took time to explain deeply what do you mean by margin, what do you mean by position amount, what do you mean by leverage, what do you mean by price movement, and how these four things react to the profits and the losses that we'll be making in trading. How these four things react, how it affects the decision we make in trading. And I gave different views because I told you that it is always good. I told you that it is always good to ensure that you understand what you are doing. And understanding simply means you are not going to be based on people's opinion on what to do. And lastly, we added the cross and then the isolated lesson or margin to it. So these are some of the things that we discussed, and I believe leveraging or taking time to understand these four things or few things here would improve and refine your knowledge and understanding about the market. So taking time again to explore more on the cross margin and then isolated margin, then we proceed with um basically the idea of stop loss, and then also not stop loss, and then the idea of margins and others related ideas, and then also fund rating, how fund rate helps traders, and how it also bring losses to trading. So pay attention and let's all engage in this session. I believe we are good to go. I believe we are good to go. So now when it comes to spot futures trading, things like cross margin and isolated margin can never be ignored with its corresponding understanding. And over time, a lot of people take time to argue over it, argue and argue and argue. So let's take time to ask ourselves or learn about it. The spots, sorry, on the cross margin, how cross margin affects trade and how isolated margin also affects trade, right? Both. So now when it comes to the use of cross margin, I've explained initially to you that the cross margin, how cross margin works is different from how isolated margin works. Then the idea is that when we have our trade in the cross margin, what favors you most is that because cross margin uses more of your funds for sustainability. Hmm, this is the word. It uses more of your fund for sustainability. So whenever you are using cross margin, the idea is that you want to ensure you can stay long in the market without getting liquidated. The idea of using cross margin is you want to stay long in the market without getting liquidated. Why? Not because liquidation won't happen, but then the idea is that if I use cross margin, it helps my funds to build more stability in the market. How does it do that? I explained this. We said when I have cross margin or when I'm using cross margin, now funds, if it is one trade that I'm trading and using cross margin, that particular trade, let's assume it is Solana. This trade shares a lot of things, especially when it comes to my capital, which simply means if it happens that I have $30 that I'm using the $30 to trade, if I have reserve, that reserve is going to be used as well in addition to the $30. In as much as it's not using the $30, sorry, it's not using the reserve, which may be, let's say, $70. This money continues to be in the market whilst my price movement becomes static. Everything becomes so smooth in the market if I'm using cross margin. Why? Because it is using part of these funds as what as maintenance. So mostly when it comes to the use of cross margin, maintenance is very strong as compared to isolated margin. Maintenance is very strong as compared to the isolated margin because you've given it opportunity for your entire capital to be used as what as maintenance. That is the reason why sometimes when you are trading using cross margin, that is the reason why sometimes when you trade using cross margin, this is what happens. When you trade using cross margin, you realize that even though $50 is what you've is seen as your margin amount, $50 is what you've seen as your margin amount, and yet if you want to withdraw, maybe you have 300, or let's assume you have $100 as reserved in your futures account. If you want to withdraw the $300, you can't withdraw all that $100. It may be $80 or $60 that you could withdraw out of the fund that you have there. I don't know if you've observed that. It's because in as much as you have the $50 in the market, still out of the $100 there, $40 is being used to maintain the trade. It's not part of the margin. If you observe that, give me one in the chat. If you've ever experienced that, give me one in the chat. Let me know if more people are building experience with time. If you observe that, give me one in the chat. Let me know. If you've ever observed that, give me one in the chat and let me know if traders are building experience. Let me know if traders are building experience. Very good. If you ever observed that, give me one and let me see. All right. Very good. Now, some of these things happens in trading, okay, using cross margin, because that money you've exposed to the market, you've given access. When you talk of cross margin, that is the opportunity for your entire trade to be shared, your total capital to be shared as margin. So even though you have $50 in this trade and you have $100 as $100 reserved, it's already backing the trade. It's there. If it happens you want to withdraw this $100, you can't withdraw. Why can't you withdraw all the $100? Because you've agreed to a part of it is being used as what? As maintenance. So the general maintenance we've been talking about, cross margin overdose the experience, or go beyond what it's supposed to do. And if this happens, it builds your trades to be static or stable in the market. Do you get the idea? So whenever you are using cross margin, it simply means you have the idea of trade stability. Even if it happens the market swallow you, because of this $50 can be in the market and the $100 is there, yet this trade would still be in the market for some time. It can be there. Even if it happens that liquidation should trigger, this trade can stay long for some time before the actual liquidation can trigger in the futures market or in the market. Sorry. Right? So anytime you use cross margin, these are some of the few things that you need to understand, which simply means if it happens, you are so fearful of losing all the money, learn to push part of this money towards your funding wallet. Maybe you have trade on the spot market and you don't want it to interfere. What do you call it? Maybe mix up. Just push that fund into your funding wallet and let it be in your funding wallet. And that is what can help you enough. Right? But mind you, if this money is not there, it loses its stability. That is the idea. Look, it's not using the money. If you make the profits, you are good to go. So that is the main reason why mostly immediately the trade gets liquidated, this $100 to get vanished. It didn't vanish because it took it just like that. It's because even though it was $50 that was in the market, it was using the $100 as maintenance. Right? It was using part of the $100 as what? As maintenance. So immediately the liquidation triggers, then everything goes along with it, because it simply means this money has been adjusted as a maintenance. Do you get the idea? Do you get it? Do you get it? Do you get it? Do you get it? Very good. Very good. Can proceed. Now, when you are trading using cross margin, this is the next thing. This is the next thing on how cross margin works. Now, should it happen that I open margin calls using cross margin, uh, should it happen that you open margin calls and you have your setup trade on cross margin, what happens to the trader is this: the margin call that you've opened will be bought, but then mind you, the capital is open. We have what you call open margin. Okay, so mostly cross margin also works as an open margin. When we talk of open margin, even though you are buying the calls, The calls is being bought, but yet automatically is exposed. Automatically it's exposed to the market. So either you buy the calls or you don't buy the calls, the funds is already exposed. But then when you buy the margin calls, what saves the trader enough is after buying the margin calls, you'll be able to earn from the sub sales. You'll be able to do it, earn from the sub sales. But either you open or you don't open the margin calls, that fund that has been reserved is an open margin. So automatically it's hedging or it's protecting the trade or maintaining the trade. That is one thing about what do you call it? Cross margin. Let's talk about isolated margin. Please excuse me. Okay, sorry. Let's talk about isolated margin. Now, when it comes to isolated margin, all right. Now, when it comes to isolated margin, with isolated margin, this is what happened. So isolated, right? When it comes to isolated margin, what helps traders is this. With isolated margin, not part all your funds that is used as maintenance, right? Not all your funds that is used as maintenance. Unlike the cross margin that all your funds is used as maintenance, with isolated margin, if it happens you expose, $20, okay? This $20 is the only fund that has been exposed to the market. So if you open margin calls, the reserved money can be bought gradually with the margin calls. And this is what draws the average price effectively closer to the current market price. That is the first thing. Secondly, this is what also widens your liquidation value or the liquidation price to which we talk about. Now, when you look at the cross margin, it is an open margin and the price or the funds are automatically fixed to or directly exposed to the trade. But when it comes to isolated margin, this fund that you've exposed to the trade, which is the $20, is what is served or reserved. So actually you have the $20 in the market and this is all the money you have. So if you open margin calls, that is when the margin calls can be more effective here because it can buy and then add up to what is having here. On the cross, nothing continues to add up much because all the funds are already used as what? As maintenance. On isolated margin, it can only add up to maintain the trade. On cross margin, the addition has already been, it's automatically made on the cross mode because the funds there is used as maintenance. But on the isolated margin, unless the fund is added up before your trade can be sustained in the market. That is the reason why if it happens there is nothing adding up, immediately it gets to $20 and everything triggers, then automatically you get liquidated. Come on, come on, come on, come on. All right, right. So immediately you get that this $20 is exhausted in the market, then you get liquidated. Why do you get liquidated? You get liquidated because this is the assumed money that the markets have got control. The market does not have any control over this reserved $100 here unless you keep adding up. That is called the margin calls. Unless you keep adding up. And when you keep adding up, that is when the trade can be effective. So if you open the margin calls on isolated mode, it could be able to buy to add up to save the trade. So in effect, with margin calls being effective on the isolated margin as compared to the cross margin, which means if I have these $20 and I decide not to open any margin, or my margin gets close or is not enough, automatically the trade will be liquidated. That is the reason why on isolated margin trade gets fast liquidation as compared to cross margin. If you understand that, give me one in the chat. If you understand that, give me one in the chat. You go there to observe, so don't worry. If you understand that, give me one in the chat. If you understand that, give me one in the chat. Let me see. All right. Very good. Very good. Very good. All right. That is awesome. Great. Let's go. Let's go. Now, this means in either ways, they are all good. Listen. In either ways, they are all good based on your understanding and what you prefer. So, like I've always been saying, this is an open lesson where I teach you what you need to know. And after understanding the various parts of it, you make your firm decision, right? After understanding the various parts of it, you make your firm decision based on your choice. Because in trading, you are using your money and do not allow people's opinion to be more interested in your own money, right? It's good, but then it's not so good, right? Okay, so now cross isolated. So when it comes to the use of isolated margin, one, no, if you have trade on isolated margin, it's a way of reducing risk. Hmm? It's a way of what? Of reducing risk. Why? Because you are not eligible or you don't want to use all funds or for all funds to be liquidated. It simply means you are exposing what you can afford to lose. That is the idea of isolated. You are exposing what you can afford to do or to lose. So when $20 is out of the market, you don't think of maintenance. When you are using cross margin, you are not thinking much of maintenance. That doesn't mean maintenance does not happen on isolated. It happens, but it's not effective as cross margin. So if it's $20, it simply means you agree that whatever happens, no matter the amount of money I have in my features wallet, this $20 is what I want it to go. Right? Now, even if you have $10,000 and you get liquidated, it's $20 that will go because that is what you exposed to the markets. You get the idea? You get the idea? So, with isolated margin, you think of how can I protect myself? And with cross margin, you think of how can I maintain my capital and win this trade? So, in as much as you want to win the trade on isolated mode, you also think of how you can protect your remaining funds from getting liquidated if it happens so. Do you get it? Do you get it? Very good. Very good. Let me know if you get it. Let me know if you get it. Let me know if you get it. So that's your question. So does it really mean you don't need margin calls when you open cross? That is not exactly what I'm saying. And it makes sense though. Listen, when it comes to cross margin, margin calls are effective. Listen, but not as compared to isolated margin. That is the idea. When it comes to cross margin, margin calls are effective, but not as compared to isolated margin. Why? Because on a cross mode, automatically the funds is being used as maintenance. So even though it may buy margin calls as you've propounded to do, but with or without, still the maintenance is working. And you open the margin calls so that it can be able to buy them at a lower prices for your trade to be remain in the market. Now listen, on the futures market, unlike the spot market where you buy average prices to make more profits, there are two things that happens on the futures market. When you buy new, buying new simply means that is you are creating new average price, right? Now this average price that you are creating, it is helping you to buy the asset at a lower price, and then also reducing the liquidation value or the liquidation price. You are reducing the liquidation price because you want to maintain the trade. That is the whole idea. But when it comes to cross margin, either you choose to reduce it or not, the fund is already used as what? As maintenance. So if you decide to buy more, it will work. If you decide not to buy more, it will still do what? It will still work. That is the idea. So cross margin, margin calls are important in your trade. In as much as it is important, that's the other side of the cross margin. Just to try explain it to you better for you to understand the concept. That is all. Okay. Now let's proceed to another key important thing that it's important for you to know in the futures market. That is funding fee. Funding funding rate or funding fee. Funding fee. And this also contribute to why sometimes when you stay long in the market, you can be liquidated. This also form part to why sometimes when you stay long in the market, you can be what? You can be liquidated. Both on cross and then also isolated. Both on cross and then isolated. But mostly it affects cross margin as compared to it affects isolated margin as compared to cross margin. And this is the reason. So now when we talk of funding fee, it's a fee or funding rate is a basically a fee that is paid among buyers. Okay. Now this is what happens in trading on the futures market. Let me take time before I explain this funding fee. Let me explain the actual futures market, how it really works. Now the real trading is spot trading. Listen, real trading is spot trading, and the other part of it is the futures what trading. Now futures price are not real prices. Listen, the futures price, they are not real price. So if you want the real price of a market, go to the spot market and you see the real price of the assets. The price you see on the futures market is based on what you call leverage. Leverage. Why? Now, price goes up because let's assume someone is having $10,000. $10,000. Okay. Now, this person has borrowed 5x. That is 10 times what? 5. 10,000 times what? Times 5. That is what the person has borrowed to trade. So this increases the value of the market. So whilst people are using huge leverage to trade, the value of the asset increases, which simply means it is because of the leverage. That is the reason why the price keeps going up consistently. So if you want the actual price, that is the spot price, Do you get it? So now, just assume everyone is trading on the futures market. Everyone trading on the futures market. Let's learn this morning. Everyone trading on the futures market. This is what is going to happen to such a person. Let's assume we are all on long position, and more people are having. We are all on long position on, let's say, Solana. Okay, Solana. We are long position on Solana. And since everyone is longing this asset called Solana, what is going to happen? The price would continue to go up, which is called the artificial price. The artificial price would go up, right? The price would continue to go up and go up and go up. And when this happens, there will always be imbalance between the spots and the futures. I have to explain this for you to understand the relationship between the spots and the futures. So you see, if it happens, let's assume we all have BTC. On the spot, BTC is 120 US dollars. On the futures, BTC is 150. Why? Because of the leverage, because of the borrowed money, the loan money they've earned, or that has been given, they've used that opportunity to push the price upwards, which makes it so imbalanced. So in this case, for these two trade, for the spots and the futures market to be balanced, to have a balance or a fair price, where the price may not differ too much, there should be a price tag or an amount of money to be paid, so that if it happens that you are paying that fee, you will take your time in terms of longing the market. That is not a problem. But listen to it. So the funding fee came in. This is the reason why the funding fee came in. One, to maintain balance between the spot and the futures market. We will go there, so don't worry. To maintain what balance between the spot and the futures market. But this is it. This funding fee is not going to be paid to the exchange. Okay? This funding fee is not going to be paid to the exchange, but they've made it so that it's going to be paid and earned among traders, among you yourselves. Listen to the idea and then how smart it is. It is going to be paid among you, the traders, which simply means if I am a trader, you are also a trader. We are all trading on Solana. Someone is trading on long position. Another person is also trading on short position, right? Now, me that I'm trading on long position, because the price keeps going up, I have to pay a fee to those losing the trade on the short position, which means the more I keep up this trade, the more I have to pay for these people. Now, mind you, I'm not paying to the exchange, I'm paying for my colleague traders. It simply means those here would earn that fee. Those here will do what, will earn the fee, while those rather benefiting would have to continue paying. Now, when this happens, some traders will begin to think, then I have to be at the safer side. If I don't want to pay, let me also join these people. So, if it happens that more people are paying, or the assets becomes very expensive on the other side, the funding fee would go higher, would increase. And if it increases, people will run away to benefit. Instead of paying, they will think of benefiting. So people will now begin to short the assets. And when the price on the short position is also increasing, now if the short traders are winning, they will also pay to the long traders. So whoever pays more would run away from paying more to earn more. You see, we are in a world where everyone wants to be at the end side of the story, where he can benefit more than giving. So People would think that, okay, if that is the case, why don't I join them to earn the funding fee than paying funding fee? So those people too will join the short position. Other people too will join the long position. Then the cycle continues. So wherever there is huge sum of paying fees, they will vanish from there. And when this happens, there would always be balance because the price wouldn't continue to go up on a long-term base. But within a short period of time, the price will get reversed because now people will begin to short the asset. And when they short the asset, the price would come down. If you get the idea, give me one. Before we go to the chart to observe it, if you get the idea, give me one. Before we go to the chart to observe it, if you get the idea, give me one in the chat. If you get the idea, give me one in the chat. If you get the idea, give me one in the chat. Mm? Right. Very good. Very good. Very good. That is great. Very good. So now let's go to our accounts and observe how funding fee works. Let's go and observe how funding fee works. Right? Okay, so let me see. Is it a question? Someone saying, I see some question here. Okay, which question? That I am still shocked. If you don't know how to fund wallets and set up your margin, please get more knowledge on YouTube before you start trading. Yes, it's important. It's important. Now, so when it comes to the use of funding fees, okay, there are different exchanges and how the rule of funding fee works. Okay, there are different exchanges and how the rule of funding fee works. So you may be using Binance, OKX, or um you may be using Binance, OKX, or Bybit to do or to trade. Now, this is the idea. If you want to enjoy funding fee, or if you want to understand how the rule of funding fee really works, we are going to use Binance to explain. Now, funding fee is paid sometimes about 8 hours, sometimes 4 hours, sometimes 2 hours, depending on the particular asset. Depending on the particular what asset, right? Depending on the particular asset you are using, or sorry, you are trading on. So let's assume on Binance. Okay, so on Binance, uh, let's tap on any of the assets or we go to futures. Okay, we go to futures, right? So let's go to futures. Good. So on futures, you can see on top here we have this countdown. Now, with this countdown, let me clean this. So you can see we have this here countdown, and then which asset is BTC? Okay, BTC. So we have positive funding fee and negative funding fee. So when you see positive funding fee, it simply means those who are paying presently are the long position traders. Long positions are those paying the funding fee, right? Now, you see over here, you can see the countdown is 7 hours, 51 minutes, 52, 50 seconds. Okay, which simply means within 8 hours time, people will be paying funding fee. So if you stay in the trade for 8 hours, you will pay for funding fee. Even if it happens that you stay, let's assume this countdown gets up to 1 minute and you join the trade, you will still pay the funding fee. If it gets to 50 seconds and you still open the trade, you will still pay the funding fee. Now, this is the countdown and this is the percentage. So Over here, the long traders are going to pay 0.0031% to the short traders. Now, the funding fee is paid based on your margin. Based on your margin. So let's assume let's assume you have this. Let's assume you have $60 in your position amount or in your trade with your account or as your margin. Sorry, you have $60 as your margin that you are using to trade. 0.0031% will be deducted from this particular trade. Now, it is calculated. Listen to this. I want to say something. That's the reason I'm taking time to explain this to you. It is calculated based on your position amount, which may be your first buying amount. Anyhow you say it, correct. So it is calculated based on your position your position amount. So let's assume you have $60 as your margin. Your leverage is 20x leverage, which simply means it's going to be 20 times 60. Let's look at 20 times 60. Let's look at 20 times 60. 1,200, right? So you're going to pay 0. So 1,200 times 0.0031%. So this is the amount of money that is going to be deducted from your this is the money that is going to be deducted from your $60. So it will be, let me see, 0.0372. So 60 minus 0.0372. So this is the amount of money that will remain as your margin. This amount of money. So if this trade continues to be in the market, if you're trading on BTC and it continues to be in the market for 48 hours, there will be a continuous deduction. If it happens that the long traders are still in the market and you are if it happens that you are part of the long traders, you continue to be paying this funding fee. But if it happens you are on the short position, you earn this same funding fee based on your amount as well. Do you understand? Do you understand? Do you understand? Am I here alone? Do you understand? Or maybe I'm here alone. Do you understand? Someone say no, please. Someone say no, please. Someone say no, please. Someone say no, please. Okay. Okay. Not yet. Not yet. No, please. Not yet. Okay. All right. Now, listen. Let me go over again. Let me go over again. Let me go over again. Amma said she don't understand. Please explain again. So for the sake of Amma Akumayeboa, for the sake of you, it's a bit confusing. It's a bit confusing. In Papa Charles said it's a bit confusing. Okay, now this is the fund rate. Okay, this is the fund rate. Let me clean the board. Let me clean everything. I believe for the fun rate you understand. They said if you are on long trade, you pay funding fee to those on short. Listen, listen. If you are on long trade, you pay to those on short trade. So these people will earn. Why are you paying? Because you are winning, they are losing. So in order for the trade for there to be balance in the market, if more people if those who are winning would pay to those who are losing, people would think of coming here to earn, because the market does not belong to only one person. It belongs to a lot of people who also want to earn, find ways and means to earn. And that is how institutional traders think, how they will always earn. So the fee on this particular asset, which is BTC, is what is 0.0032. 0.0032. Now the countdown as it stands is 7 hours 44 or 45 minutes. Let's assume 45 minutes. So you can observe the countdown. What we are saying next is, if it happens that you join within this period and the trade gets sold before this countdown, you are free. But if it happens, even if you join 30 seconds, once you open the trade within this 30 seconds and the countdown affects you, you pay the funding fee. Now, if it happens that you are 1 minute in trade, you still pay the funding fee. If it happens that you open short position within 30 seconds, you earn the funding fee, because these are the people paying. So it's either you earn funding fee or you pay funding fee. It is given to traders, not the exchange. So among traders earn among themselves, right? Traders earn it among themselves based on the number of people that are trading that particular asset. All right. Now, this is how it works. Based on calculations, what we are saying is that now the funding fee though is being paid to both partners in a trade. But if it happens that, let's assume you have $60, I'm still using the same capital. It simply means 0.0032% is going to be deducted from this margin. This is your margin. This is the amount, the real money you have. So this 60%, this 0.0032% would be deducted from this $60. And before it is deducted, they won't just deduct 0.003% off from the $60, but from your margin. So if, let's assume, your total trade, your position amount is 1,200. Why 1,200? Because you are using 20x leverage. 20 times 60 is going to give you 1,002, right? So 0.032% will be calculated on $1,002. $1,002, 1,200 what? Dollars. And once the value is obtained, the deduction will be made from this capital, because this is the real money. $1,002 is not your real money, it is your leverage amount or your position amount. So the actual money will be deducted from this. That is all what I'm saying. That is all what I'm saying. So if it happens that you are on cross margin or isolated margin, you still pay the funding fee. So you see, this is where the issues of liquidation will get in. But then before I proceed, let me know if you've gotten the concept now, how it's being paid and how it's being calculated, the calculation and how it's paid. So the person using 20x with $60 margin, his total position amount is 1,200. So 0.003 of 1,200 will be calculated and then deducted from the $60. If you get it, give me one. Do you get it now? 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 So do you get it now? Yeah, am I a boy? Do you get it now? Am I a boy? Do you get it now? Or you want to go for extra classes? All right, very good, very good, very good, very good, very good. So learn to understand so that you wouldn't go for extra classes. You will pay out of pain. So Hindu is saying not yet. Hindu is saying not yet. Hindu. If I don't take time to explain, Hindu will go for extra classes. Mm. Now, mhm. All right. So now I don't know which parts that Hindu don't understand. Now what we are saying 0.003% is 2% is going to be paid as what as funding fee to your opposite or your opponent. Mind you, on the futures market, it's a battle between short traders and long traders. Either the short traders are winning or the long traders are winning. So what we are saying is those who are winning will pay to those who are losing just to balance the market. Do you get it? Just to balance the market. That is what we are saying. So at the end of the day, if you are on short position, you'll be paid to those on long position. And if you're on long position, you'll be paid to those on short position. So I was just trying to explain how it's being calculated. So the calculation, we know this is the value. Now we can change the assets. Let's change the asset to, let's assume maybe Litecoin. Good. Now changing this asset, this is the funding fee. Can you see? BTC was 0.0032. Now this is the fee for Litecoin. That is LTC. LTC. This is the value for LTC. Now you can see this is it. 0.0061. That is what is going to be paid after 7 hours 39 seconds or 38 minutes. 7 hours 38 minutes. That is what is going to be paid to the short traders. To the short traders. And I said, irrespective of the time you join this trade, once this time counts down and you will pay. You will pay. Provided you are still in the market, you will pay. Right? So it simply means 0.0061% is going to be paid by the long traders, which I made calculation that let's assume my margin money is $50. Let me use $50 this time around. My leverage or my position amount, I chose a leverage of 10x. So 10 times 50 will give me how much? 500, if I'm right. 10 times 50 will give me 500. So since I'm having $500 as my position amount, now I'm using these terms because last week we discussed about position amount and margin. So now I assume you are familiar with them. So $500 as my position amount that I'm using now. If it happens that I have to pay for this 0.0061, the money will be deducted from the $50. But the question, how much will be deducted? If I know the amount that will be deducted, if I want to know the amount, that is going to be based on this calculation. My $500 times 0.0061%. So that is going to be this. That is going to be this 0. 0.03505. That is the amount of money I'm going to pay. So it's going to be deducted from $50. So 50 minus 0.035. So let's look at it. So 50 minus 0.0305. So it simply means I'll be remain with this value. I will be remain with what? With this value, that is 49.9695. Now this is where it affects isolated margin most. This is where it affects isolated margin most, especially when you stay long in the market and you're on isolated margin. Your trade continues to decrease, or your margin would continue to decrease if it happens it stays long, because the next day 49 has been deducted, another time something small has been deducted, the next time you realize your trade is around 48 USD. It's $2 is gone. You get it? $2 is gone. And since the price keeps the capital keeps reducing, you'll be liquidated. Now, do you get the points now? Do you get it? Do you get it now? Do you get it? Do you get it? Let me know if you get it. Let me know if you get it. Very good. Very good. Very good. That is awesome. Very good. Very good. That is awesome. All right. So let's proceed. Let's proceed. Okay. Now, let's talk about the next thing. So when it comes to benefiting from funding fee, if you want to trade an asset, since you take time to analyze the asset, also take time to see who are the earning points or the receiving points. Either your decision of going on short or your decision of going on long. Either the long traders are on the receiving point or the earning point. Okay. Now there is one secret thing about the funding fee, is that the funding fee also give you clue to those who are sometimes in market control. The funding fee also gives a clue to those who are in market control, right? So it's always good to check. So when you come here, you will see it here. You see the countdown, and you see those who are going to be paid, who are going to pay the funding fee, and those to be paid for, right? So this is it. You see it is positive. Sometimes you may see it to be negative. This is it. Sometimes you may see it to be positive. Another time you may see it to be negative. If it is negative, it simply means those making payments are the short traders. That is what it means. Now, let's go to another important point. Let's proceed to another important lesson about the idea of risk management. Risk risk management using margin calls and then also stop loss. Stop loss. Now, first, let me start from stop loss. Now, stop loss over the years has been assumed, or yes, it is believed that it is one of the best risk management tools to use. It is one of the best risk management tools to use, and it's good, it's fair, it's reasonable. Okay, it's good, it's fair, it's reasonable, and this is when we talk of stop loss, this is what we mean. Now, let's assume I set up a trade. Let's assume I set up a trade and capital is $200. I set up a trade and I'm expecting to make profit of $20. Okay. Now, this $20 profit that I'm expecting to make, I know that the market could also go against me, which would trigger what we call liquidation. Liquidation. So I have to think of how I can protect myself to win the trade, or I can survive the trade. So since I know my expectation is to make $20 profit, the idea of stop loss is that let me find a position or a place in the market where I can set up a value so that if it happens, $50 of my capital go out of the market and still I've not won the trade should be closed. Since it hits that value, so if the price hits this value here, automatically the trade will close. Not because you don't want to win, but because you are okay with whatever you've lost. So you are not in anticipation to win. In this case, your anticipation is that when it happens that you win, that is fine. But your focus is on protecting this capital. So if it happens that $50 gets out of the market and yet this result hasn't returned, the trade should be closed automatic. So now the trade will be closed, 150 will be remaining in your account. Now mind you, this is different from isolated. This is different from what? From isolated. This is what we call stop loss. So if it happens that I am using a stop loss, I have a fair view that when the price goes down against me, this is where I want to control my loss. That's the meaning of stop. I want to stop the loss. Okay? To stop the losses that you are making. So if I have this $200 and then also it happens the price goes against me in the market, let's assume $10, I want to close the trade. I no longer want to continue the contract. You get it? I no longer want to do what? Continue the contract. I want to end the contract. That is the meaning of the stop loss. So anytime the idea of stop loss comes in mind, the rule is simple. You want to control your losses. You don't want to lose all these $200. And since you don't want to lose all the $200, you want to provide a value in the market to ensure that once the price gets to this value and then the profit has not yet been made, or there is no intention for the price to go back, then automatically this trade should be closed so that whatever you've lost should be maintained for you to make back your remaining capital. If you understand that, give me one. 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 Someone saying, can you please go over the funding fee if it's positive and negative? If you understand that, give me one. Okay, let me see. If you understand that, give me one. Very good. Very good. So, for the sake of Equia, what I said about the positive and negative is that if funding fee is positive, it simply means the long traders are the one paying. If it is negative, it simply means the short traders are the one paying. That is what I said. I believe it's okay. So the idea of stop loss is simple. This is not any too extraordinary thing. Just like someone trading, the person think, okay, I observe the trade, and since I observe, hey, I'm panicking. So since I'm panicking, I want to close the trade. I'm okay with the loss. I don't think I can continue my trade again. It's simple as that. So the idea of stop loss is to ensure that the trader would protect himself from losing and also from winning, because you are not going to win the trade. Okay, you are not winning the trade, you are losing. So since you are losing, you should exit out of the market. That is the idea of stop loss. So with the stop loss, either you are in or you are out. Either you are online, you are not online. Once the trade trigger your stop loss, your trade will be closed automatic. Your trade will be closed automatic. So mostly this idea of stop loss is being used by what we call retail, mostly a lot of retail traders. What I call the abochi traders. We the abochi traders, we love stop loss a lot, right? Now, our main idea of using the stop loss is that we don't want to lose all our capital. We don't want to be liquidated. That is the point. We don't want to be liquidated. So since I don't want to be liquidated, I want to ensure that part of my funds will exit if I'm not winning within a particular time. So it simply means I am explaining things to you in a better way for you to get it clear. So if you set up the trade, your main idea is I need $10 with my $50. I need $10 with my $50. But if the market will mafia me enough and then lose $30 to the market, the $20 should be reserved for me. I need it back home. Let me go back and rest. So once $30 go into the market, either there will be a win at the end or not. This $30 is in the market and you are okay. You said no, I can't continue risking. I can't continue risking all the $50. I can't risk all the $50 since I don't know where my profits would return. I can't risk all the $60. And since I can't risk all the $60, $50, now the $30 is enough for me. It's okay for me to lose the $30. Get back my $20 for me. Let me get my $20. And once I get my $20, I'm free. I'm okay. I know that I lost $30 and I didn't lose all my capital. Right? Now, hope you get it clear. Someone is saying, does RoyalQ have a function of stop loss? Yes, of course, they do have. So stop loss in general is a price at which you prefer a trade to be triggered for loss. Okay? Stop loss is a price in a trade at which you prefer a trade to be triggered for loss rather than continuing to expect profit. Okay? Rather than expectation or continuation to expect what? Profit. So in this case, let's assume this is a trade. This is a trade. Let's assume this is a trade. Now, with this particular trade, this is where you've started. You made an entry at this point. This is your entry point. Now, this is your liquidation price. Okay? This is your liquidation price. Simply means when the price gets here, you'll be liquidated. So you decided, okay, no, then I prefer to set up a price here. Even though the exchange has given you a liquidation price, the liquidation price has been given, but you prefer that, okay, when the price gets here and my target has not been hit yet, the trade should be closed automatic. That is all the meaning of what? Of stop loss. That is all the meaning of what? Of stop loss. So the idea, and use stop loss and use this, I believe you get it now. I believe you get it now. Do you get it? Do you get it? Before I proceed to explain the other side of it. The other side, which is the margin. So we contrast the two, right? Do you get it? If you get it, give me one in the chat for me to know. Do you get it? Do you get it? If you get it, give me one in the chat. If you get it, give me one in the chat. If you get it, give me one in the chat. If you get it, give me one in the chat. No, stop loss and margin calls does not work currently. Very good. All right. Now, the next thing is this. If I open margin calls, when we talk of margin calls, what is margin calls in the first place? Now, if I open margin calls, the idea is that this place is my liquidation price. Okay? The idea of margin call is this. I know my capital is $50, but I don't want to use all the $50 to trade. I want to make sure that I can buy the trade in batches. So I'll first expose $10 to buy. Now, between this range from my entry point to this place is a stop loss. But I want to buy below. So if the price gets here, instead of me closing the trade, I still want to buy another $10 here. Because I don't know where exactly will the price reverse. And I want profit. Listen, I want profit. So since I don't know where the price would reverse, this $50, I intend that, okay, instead of me opening the trade with $50, I won't open the entire trade with $50 so that when $30 lose here, then that will be the case. But instead, I want to divide the $50 into different batches. So I'll buy $10 here first. Then the next thing, I'll buy another $10. I'll buy another $10. I'll buy another $10. Because I believe that by the time this $10 will continue to be buying, the market would have reversed back for me to hit back my target. So with all my conviction, though I know things may not always go as I prepared or I planned, but definitely there could be a way I can make something. So the interesting part of it is sometimes and mostly right after your stop loss triggered, then the price will begin to go in your favor. It happens and traders knows this. Right after the stop loss or trigger, then the price will begin to go in your favor. Why does this happen so? Because your stop loss serves as liquidity. Now, you've added more capital to the market. Your stop loss serves as liquidity to the market. So immediately, whatever money you lose, it's added up to the market, and any money that goes into the market is called what? It's called what? Liquidity, right? So the person having this $50 decide that, okay, I'll be buying them in batches. So I'll buy $10 here, $10 below, $10 below, $10 below, $10 below. Because I know by the time it gets here, the price would have reversed back for me to make my profit. Just as after your stop loss triggers, I started making profits. When the price gets below, maybe I will make profit. So the idea of margin call is that I am dividing my capital into batches so that I can be able to buy more. So buying more would help me to meet the winning targets on my way. Once you are out of the game, the person using the bargain course is expecting that he will be able to win with time. So in this scenario, using the stop loss is good. Using the margin call is also good. Now, using the margin calls of the trader sometimes to win because the trader is having that expectation that I could definitely win this trade because I came here to win. Though I could fail, but I want to increase my probability of what? Of winning. Do you get it? So when I have the margin call, the idea of the margin call is that, okay, I know I'm having $50. With this $50, I am not exposing the $50. Now the idea is this. The person who used $30, okay, The person who used that, this is the area of the stop loss. Okay. Now, this $30 is gone. But then the person having that money did not use all the $30. He bought parts here, $10 here. And he waited enough below the stop loss, he bought another $10. Below, he bought another $10. By the time he started buying this, the price reversed back. Now, with these two people, this person has lost all the $30 here. This person has capitalized on the $30, so the price reversed back. I don't know if you get the idea. If you get what I'm saying, give me one in the chat. If you get what I'm saying, give me one in the chat. If you get it, give me one in the chat. If you get it, give me one in the chat. If you get it, give me one in the chat. If you get it, give me one in the chat. If you get it, give me one in the chat. If you get it, give me one in the chat. Let me know if you get it. If you get it, give me one in the chat. If you get it, give me one in the chat. Very good. So in as much as the stop loss is good, the margin call is also good. Right? In as much as the stop loss is good, the margin call is also what? It's also good. Now, mind you, the fact that I'm using margin call doesn't mean I will win automatically. The fact that I'm using margin call does not mean that I will win automatically. But the probability that I could win is higher than maybe using the stop loss, because once the stop loss is triggered out of the market, I'm out. But I have capitalized on that same fund to buy more. So since I have been able to fill the gap, now I will be in the market waiting for profits, while the person who used the stop loss is out of the game. You get it? So you may prefer stop loss. Another person too may prefer margin calls. You are all not wrong. That is based on your risk appetite. What you can afford is what you are doing. But not just what you can afford, but what your knowledge of experience is giving you. Right? So I've always been saying, do not always sit down for someone to dictate to you about trading. Be convicted with what you understand. And once you have the conviction, you can make a bold decision on what you are doing. You get it? So sometimes you prefer to use a stop loss. Sometimes you prefer to use margin calls. Yes, of course, they are all good. Do you get the idea? Do you get it? Do you get it? Let me know if you get it. Let me know if you get it. Do you get the idea? Very good. Very good. So, ladies and gentlemen, it is always good to understand some of these things. It is always good to understand some of this before someone will press your neck that stop loss is the best, so use stop loss. Stop loss is the best. Margin calls is the best, so use margin calls. Yeah, I prefer margin calls. Yeah, no, no. There is nothing like neck pressing here. We don't want neck presser. Don't allow anyone to press your neck presser. The person, this strategy is the best. This is the best. Use this, use that, use this. Because I've been using it. Then you come. And why did RoyalQ don't use stop loss? And why is leaders not teaching stop loss? Why is leaders not talking about margin calls? What is the essence of margin calls? Hey, my brother, relax, relax. You get it? Just relax. If you don't know, take your time. Eh? Morefe ran. So you said Morefe run. Morefe run. Morefe don't want to run. He wants neck pressing. Eh? Morefe don't want to run. He wants neck pressing. There is nothing like neck pressing in trading. Eh? There is nothing like neck pressing in trading. So me, I want you to know that both risk management are good. Yes, if you understand whatever that is good, use it. Me, that is what I will tell you. I'm not coming to tell you this is the best, this is the that. No, it is there for you. Use what is good for you. Don't come and press people's neck here that this is the best, this is the great, this is the this. No, at all, not at all. You get it? So when the idea of stop loss is very simple, and sometimes I do use stop loss, of course. I do open margin calls a lot in most of my trades, but I mostly use margin calls, and sometimes I use stop loss. But mostly using stop loss, you get triggered for. By the time you come, your trade is already out of loss. It has been closed. You open margin calls, you come, your trade is still running because you are still in anticipation. Things work out for you. They are all good. Because sometimes you open margin calls, you come, you'll be liquidated. That money is gone. Yes, of course, because that is the amount you can afford to risk. Because in trading, so if you don't want to lose anything at all, then that is it. Oh, someone tell me I don't want to lose anything at all. So be it. So in an anticipation of not losing anything at all, then do not use stop loss. But in an anticipation for not to lose all your funds too, then when you open margin calls, know that you can afford to expose what you want to expose. Yes, someone is saying they don't trade at all. They don't trade at all. That is it. So, ladies and gentlemen, I believe all these are knowledge, fair knowledge that every individual must learn to trade, must learn to understand, to use. Every individual must learn to understand them so that no one will press your neck. That this is what can bring Moses from the mountain. This is what can bring God from heaven. This is what can do this. No, my dear, no. So I believe this is going to help you. Let me end here. If you have a question to ask, ask your question. Let me end here. My let me end here. If you have a question to ask your question. I'm already exhausted. This Qatar want to kill me. It wants to end my life. So let me end here. Let me end here. If you have any question, if you've understood the lesson, give me one. So okay, so let me check the chat box to see if there's any message. Okay, so that is good. Okay, all right. So let me know. Okay, so I guess there is no question. I guess there is no question. I guess there is no question. So we will end here. We will end here this evening. There will be a meeting this evening. So let's get prepared. There will be a meeting this evening led by Coach Mo. So let's get prepared. I will discuss with him. If you'll be available, I will let you know. Discuss with him. If you'll be available, I will let you know. So I'm a future trader and I want to start using RoyalQ. I have activated my account. Just trying to understand the settings of their bots. All right, that is good. That is good. So I guess you are on the platform. So do well, Michael. Do well to learn the settings. Every Monday we discuss about trade settings, and we also have some of our lessons on the YouTube channel that is RoyalQ Evolution. So you can join to learn more about that on our RoyalQ about trade settings, you can learn more there. If not to um your upline, I don't know who is your upline. I believe your upline can help you to do more too. Yes, your upline may be great person, may help you to do better. So please, that is it. And also we have the RoyalQ Evolution. Okay, I'm in the group. Oh, okay. I'm in the group. Then that is good. Since you're in the group, that is good. Then you are good to go. So, guys, I believe we will end here. So, thank Coach. You are awesome teacher. That is good. Thank you too for being here. So, we will end here. If God permits, I believe we shall meet this evening. The platform is also open. And let's all do ourselves favor by not chatting anyone for extra classes. If you go for extra classes, don't come and report. Because if you report to us, we will block you. We remove you. I'll remove you and block you and ask everyone to block you and report you to WhatsApp. So please be careful. If you want to go for mentorship, listen. RoyalQ has provided mentorship. They said if you want a mentor, when you talk of a mentor, that is RoyalQ has given that opportunity. But if you think you have money that you want to pay for extra classes, there is no problem. This Zoom, let me tell you, this Zoom, we pay for the Zoom. Every month you subscribe for this. Bring that money. Let's use to pay for the Zoom. Right? Since you've been joining us all the time, bring that money. Let's pay for the Zoom. We've been paying for the Zoom. Let me see. Leader Doris is here. She will tell you we pay for the Zoom. So if you think you have money that you want to go for extra classes, no problem. We will give you the Zoom. The Zoom is here. 24/7 it's here. We do meetings in the morning and in the evening sometimes. So we will give you that platform, right? So just bring the money. If it's $1,000 you want to pay, bring $1,000. Let's use that money to subscribe for the Zoom. Let's use the remaining balance to do other basic things to build a business for people, right? Yes. So please take notice of that. If you think you have more money, no problem. Bring more money. We help you spend it. Hmm? So that is my message for you. So guys, let's be careful out there. Me, if you come to report to me someone has scammed you, you'll be the first person. I'll swear for you. After swearing for you, I think the rest it will be history. Yourself, you will not see us again. All right. So I've seen something. Where is it? Okay. So I'm a newcomer and I speak French, but I try to understand your explanation. Okay. So Florence, I believe you're on the platform. Those French speakers have to we have to find a way to solve some of these challenges. Maybe we'll get interpreters. I don't know. Maybe I'm thinking so. We will discuss on that on the leaders platform to see how we can help our neighbors who find it difficult understanding the English language, especially the French speakers, right? Because in Africa, it's divided into three or two. We have the francophones, the anglophones, and the sure. So we will find a way to see. Yes, hope you continue with the class we're supposed to have this morning by tomorrow. Yes, we will do that. A technical analysis, we will do that tomorrow. If God permits, tomorrow we will do that. So guys, I believe there is no challenge again. I believe you are not facing any challenge. Take your time. Trading is not a sprint, okay? It's a marathon, it's a gradual process. You wouldn't just make everything in a day. It's a gradual process, and I believe with time, everyone will get this necessary result. Don't let maybe out of frustration someone lured you into a different platform or someone tell you that bring $10 million and let me do something for you. Get trusted people. The leaders are there. If you think you have any challenge, chat the leaders. We are there, right? But if you backpass anywhere to think you are going to seek for solution, look at the number of times you present here. Look at the number of times you present here. Coach Mo would have to be here. Coach Musa would have to be here. The Doris would have to be here. Myself have to be here. Sometimes it's 4:30 a.m. I wake up to teach. Now it's only early morning in Ghana. It's 8, it's actually 9 o'clock now, right? I'm not taking my breakfast yet. But because I love you and I want to see you progressing, I'm here with you. Do you get it? I've not taken my breakfast yet. Hmm? So please, we always put you first to ensure you can also progress and learn to do yourself a favor. Do not let frustration. If you think you are frustrated, chat leader that has been being ensuring that you can progress to make sure that they will attend to you and be with you. Do you get it? But if you bypass to think you want peace of mind, you want this, how? Now the story of everything being that you will be there and now whatever you wanted to pay for, you couldn't get it. And now who do you blame? Who do you ask? Do you tell the leader that we are scammers? No, you can't blame anyone because no one has ever taken your penny. Me, I never come to anyone that bring money for us to pay Zoom or bring money for us to do flyers or bring money for us to do this or bring money for us to take to do this because no. Have I ever taken money from anyone? Never. Hmm? Whatever we want to do, we do it ourselves. Whatever knowledge you are gaining, you gain it for free. You don't pay us. You don't even say, "Oh, brother Emmanuel, maybe because you paid." No one has given me anything. Say, brother Emmanuel, because you are doing this, or leader Coach Musa, because you are doing this, take this. No. So instead of you to be here, remain focused and then also get the necessary results. Why rush going out there to pay? If you think you have money to pay, don't worry. I said bring it. We will use to subscribe for the Zoom so that we can all learn together. We will take our time to teach you since you've contributed something. We will take our time. Oh, we will say, okay, this person, I'll tell the leaders, my brother, this person has paid. Oh, he said we should use that. We will appreciate you here. We will let everyone know that this is contribution to the Zoom. Oh, I will do that. We will do that. Huh? But go buy, go and do whatever you think it's good for you. If it happens, they scam you, don't get closer to anyone. Just remain there. Hmm? All right, so guys, let me see. So thank you, coach, for the sacrifice to help us. Thanks for all the leaders. Yeah, it's very good. And signal shared. Yeah, that is good. So please let's all be careful. So my name is Iverson Fisher from South Africa. Trading is a very complex subject, but we are in it for a long while. Thank you for great meeting. I took very good lesson. Yes, that is awesome. Okay, so guys, I believe we will end here. Go and enjoy your day in peace. Go and enjoy your day in peace. The platform is there. If you need any assistance, you can ask your question on the platform. Yes, and we'll be available to assist you. Let's all live as family members. Let's love ourselves. Do not cheat on anyone. If you think you are a scammer, go and scam your family members. Do not scam anyone on the platform. If you think you are a scammer, go and scam your family members. Yes, do not scam anyone on the platform. Peace be with you and peace be with everyone. I love you all and have a good day. Bye 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 bye.